Welcome back to The Explainer. Today, we're literally peeling back the layers of a massive, sudden shift happening right now in the AI market. For years, the whole artificial intelligence boom has been completely dominated by one really loud question. How many GPUs can companies actually get their hands on? But right before our eyes, that narrative is shifting. We're going to look at why the unglamorous infrastructure surrounding those chips is suddenly stepping into the spotlight, and we'll use the hard data to figure out exactly what's going on.
Take a look at this. During Monday trading, SanDisk stock suddenly shot up roughly 11% intraday. In the world of massive semiconductor and storage companies, a double-digit jump in a single day? Yeah, that's a massive flashing siren. It completely demands our attention.
But the crazy part is, this wasn't happening in isolation. Almost at the exact same time, Micron rallied around 6%. The momentum was spreading like wildfire.
Western Digital. They also climbed about 6%. So here's the crucial question we need to ask. Why are memory and storage stocks suddenly catching fire? Why are they rapidly becoming some of the absolute strongest names in the entire semiconductor space?
All right, Section 1, the memory market explosion and the catalyst.
Let's dive into this. Investors are finally waking up to a brand new reality, what might just be the next major bottleneck in the AI boom. It turns out building an AI economy requires a heck of a lot more than just blazing fast processors. Elon Musk actually hit the nail on the head recently, issuing a warning that boils down to one simple but frankly terrifying question. Do we have enough memory and storage to keep up? Because here's the deal, we aren't just training models once and walking away anymore. Today's AI agents are continuously pulling information, using tools and interacting with software. Inference, the actual everyday use of AI, is expanding exponentially. And all of that continuous access, it requires memory. A lot of it. If we don't have enough, the whole system just grinds to a halt.
Moving on to Section 2, the AI infrastructure stack.
To really grasp what's happening, we need to completely reframe how we think about AI. It's not just some invisible magic happening in the cloud. It's a hardcore, physical, layered supply chain. At the very top, sure, you have the AI models. Underneath that, you need massive compute power, your accelerators. But guess what? Those accelerators absolutely need high-speed memory to even function. Then, you need storage for the massive data sets, networking to connect it all, huge physical data centers, and an insane amount of electricity to keep the lights on. Every single layer matters. It's like a giant Jenga tower. If demand explodes at the top, the pressure travels all the way down. If memory, sitting right there at layer number 3, becomes constrained, the entire AI expansion gets bottlenecked and becomes dramatically more expensive.
Which brings us to Section 3, SanDisk's massive AI numbers.
This memory infrastructure boom isn't just some theoretical story anymore. It's literally showing up in the balance sheets right now. Just look at the sheer scale of SanDisk's fiscal 2026 revenue figures. Overall revenue hit around $20.25 billion, which is an incredible 175% increase year over year. But wait, look at their data center revenue. It's skyrocketed by a mind-blowing 437%. SanDisk isn't just selling consumer flash drives anymore, guys. Their tech is becoming directly, inextricably linked to the massive data centers powering artificial intelligence.
And beyond just raw growth, SanDisk announced 8 new business model agreements representing a staggering $93.9 billion in total contract value. Why is that such a game changer? Well, traditionally, the memory market has been incredibly volatile. Companies usually just ride out short-term market prices, but by securing these massive multi-year agreements, SanDisk is essentially locking in long-term financial visibility. It shows exactly how aggressively they're positioning themselves for an AI future that demands a constant, bulletproof supply of memory.
And based on that incredible visibility, management is targeting some absolute monster numbers for 2028 to 2030. Roughly 80% gross margins, 75% operating margins, and about 50% free cash flow margins. Now keep in mind, these are targets, not guarantees. Manufacturing costs can spike, and competition is definitely going to heat up. But if AI demand stays structurally strong, the financial upside here is absolutely immense.
Let's pivot to Section 4, Micron and Western Digital's roles.
Because SanDisk is just one piece of this puzzle, Micron and Western Digital play distinct, totally vital roles here. Micron is the one providing the highly advanced DRAM and NAND, the ultra-fast working memory sitting directly inside modern computing infrastructure. The more sophisticated these AI accelerators get, the more desperately they rely on Micron's high-performance memory to keep up. Meanwhile, Western Digital is building out the massive storage architectures. Remember, AI doesn't just process data, it spits out mountains of new data every single second. Training sets, model checkpoints, AI-generated content. All of it needs a physical home, and that is exactly where Western Digital steps in. The opportunity is massive across the entire data infrastructure.
But before we get too carried away, Section 5, the cyclical memory trap.
We have to look at the inherent risks, because memory manufacturing is no joke. It requires giant factories, insanely complex equipment, and billions in capital. It takes a lot of time. So we're looking at a huge central tension. On one side, you have the bull case. AI demand keeps surging, hyperscalers keep spending, and AI agents become mainstream. Supply stays tight, giving memory makers massive pricing power and huge margins. But on the flip side, the bear case. Memory is a historically, notoriously cyclical industry. Usually when prices rise, manufacturers rush to build more factories. Eventually supply catches up, or even worse, big tech suddenly pumps the brakes on AI spending. If that happens, prices crater, margins vanish, and we hit a classic oversupply trap. It's a very delicate balancing act between sustained AI scaling and those old, historical cyclical dangers.
Which leads us to Section 6, the shift in AI investment.
Considering those heavy risks, why is Wall Street so obsessed with this exact tension right now? Well, let's step back and look at the broader evolution of the AI trade. The smart money is logically moving down the stack. In step 1, the only question was, who makes the best AI chip? Once that was dialed in, we moved to step 2. Okay, who's actually building the physical data centers to house them? Then, recently, step 3 became the hot topic. Where on earth are we getting the massive amounts of electricity to power these places? And now we've officially arrived at step 4. Where is all the memory going to come from to keep these beasts fed with data? Investors are actively looking past the initial winners and hunting for the foundational bottlenecks that every single AI system needs to survive.
And that brings us to our conclusion in Section 7, the final question.
We've seen SanDisk jump roughly 35% in just a 5-day period. We've seen that 437% explosion in data center revenue. Wall Street is aggressively repricing these stocks because they realize memory could be the ultimate choke point of the entire system. The stakes here couldn't be higher. So I'm going to leave you with this final provocative thought to chew on. Looking at these companies, SanDisk, Micron, Western Digital, are they simply riding yet another classic boom and bust memory cycle? Or has artificial intelligence fundamentally broken the old rules, transforming them into the next permanent critical infrastructure companies of the AI revolution? The data is moving incredibly fast, and how this question gets answered is going to define the entire next era of the AI economy. Thank you so much for joining me on this explainer. Keep learning, keep questioning, and I'll catch you next time.